Hello everyone, and welcome to this presentation of how to know with pinpoint accuracy when a sell-off has ended. Now, I want to start off by sharing with you this example right here and asking you, has this ever happened to you before? In this example here, we see that the stock, in this case TSS, has had a small but minor sell-off, but let's say you decide to try and pinpoint where it's going to end. You maybe go to a chat room or someone tells you that this is where the bottom is, so you step in and buy, and this happens. All right, so maybe you just want to double up because perhaps you got in a little bit too early. Now the people on TV or the signal service you are subscribing to recommends that you purchase it here because we made a nice short-term bottom here. So maybe you just got in a little bit too early, so you double down, buy some more, and then this happens. Okay, very common. A lot of people are always trying to pinpoint where the bottom is. Everyone has their own perfect tool. Well, I'm going to introduce you to a tool today that had you applied this to this particular example, you would have known on this bar that the sell-off had concluded, and hopefully you would have been able to take advantage of the very nice rally that started after that. So this promises to be a great presentation today. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And for those of you who are new to my webinars that I give on a weekly basis, we are all about teaching you how to take control of your own destiny in terms of trading. We really want to empower you with the tools and techniques that I've accumulated in nearly 40 years of trading. I started my career out on the floor of the Pacific Stock Exchange nearly 40 years ago. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where you get the name Specialist Trading. Now, a lot of people aren't familiar with what a specialist did or what they do. There aren't really a lot of them around anymore because of the advent of electronic trading. But in the old days, if you ever look at those old pictures, Google them, where the people are yelling and screaming with lots of paper on the floor and a big room, and they're making all these weird hand signals. Well, if you wanted to buy or sell a particular equity, you went to the trader who specialized in it. So, for example, IBM had a certain specialist that specialized in it. You wanted to go to Apple, there was a certain person who specialized in that. And if you wanted to trade waste management, you would go to me. I specialize in that. I was a specialist for waste management on the floor of the Pacific Stock Exchange. I traded through the crash of 1987 and the bull market, I should say, that followed after that. So I've been around every market environment, every type of trading system or strategy I've tried or at least jumped into myself to try and see if it works. So I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading. We just teach and mentor all of my students and members in virtually every country around the world and in every state in the United States. We teach and mentor them the things that I've accumulated that I currently use in my own trading. So hopefully you will be able to take these things and through my mentoring and education and then empower yourself so that you make your own trading decisions. That's what we're all about, feeding you this education so that you can ultimately go on your own. And you won't have to rely on anyone or anything to tell you how to trade or what to do. This, in my opinion, is the only way a student will become a consistent trader. Okay, so this is what we do at Specialist Trading. Now I'm going to show you a great technique that will really help you in pinpointing these bottoms and the ends of the sell-offs in stocks and in virtually any market, actually. But before we begin, we're required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular tool and this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this, and as you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there. You may want to copy that down at SPCLSTTRADG. Every day I post information anywhere from signals that our strategies have generated to little bits of wisdom, tidbits of wisdom along the way. So lots of great free information. Feel free to follow us on Twitter. All right, now as I stated in the opening statements, we are an educational company. We're not about force feeding you signals on telling you what to buy and what to sell, what the perfect time frame is, what the perfect market is, what this news means. We don't believe in that. Our sole job is just to empower you with the tools that have stood the test of time, things that have worked in terms of consistency, and then mentor you along the way so that you ultimately can be on your own. As you can see here, my goal is not to force feed you signals. My goal is not to force feed you what the perfect market or time frame is. My goal is simply to teach you how to trade with the specialist edge. Now, this is the same edge that was able to turn my trading around nearly 40 years ago, because even though I was on the floor my first year or so, I struggled tremendously. So I know what a lot of you may be currently going through. I know how very discouraging it is to put the hard work in and to take all the courses and spend your good hard-earned money and to not see results. So this is what we want to do, and you'll see the attention we give to detail in our free presentation, so that you can ultimately take away something with you, so that you can hopefully start to use as soon as possible. All right, so this is going to be an educational class. The one thing I would like to suggest is that if you happen to have any questions, I'd love to answer each and every one of your questions, but kindly wait till the very end of the presentation. It will seem to move a lot smoother that way. And I have a lot of slides and a lot of examples to share with you, so we have a lot to go through today. So oftentimes, if you wait for the next slide, your question will be answered. So in about 30 minutes, we'll take any questions that you may have. And I will only answer one, and that's the most common, and that is this being recorded? Yes, it is. We record all of our presentations, so if you have to leave early or if you're having technical difficulties, you can contact Pro Trader Strategies. They're my sister site, and they will furnish you with a link to this recording. All right, so kindly keep any questions to the very end of the presentation. All right, so let's begin. And here's what you're going to learn today in today's class, all right? You're going to start out by showing you how most people think a sell-off has ended, all right, myself included. This is the way I used to trade, and this is, how every once in a while I would be able to tell when the sell-off was over and the sellers had dried up, but most of the time it didn't work. And then I'm going to share with you a simple but high probability technique for trading sell-offs in virtually all markets and all time frames. So I don't want you to think, if I happen to show some stock examples, you say, well, Steve, I don't trade stocks, so I guess this wouldn't work for me. No, I'm going to show you examples in the futures. I'm going to show you examples in currency pairs, in different time frames, 15-minute time frames, weekly time frames. I'm also going to show you some examples in commodity markets, okay? And I'll start out with some examples just for learning purposes only. All right, now here's the way most people try and conclude when a sell-off has ended. Now, support and resistance, a very common way to trade. I know when I first started trading, this was the big thing, support and resistance, finding out where all the bottoms were going to be made. And let me share with you how most people will trade this. So if we look at this generic chart here, we see that we've been going higher, we've been going upwards, and then we start to sell off, all right? So let's say that, the signal service you go to or the chat room recommends this, and you want to try and pick a bottom when the sell-off has concluded. Now, if you're trading support and resistance, well, usually you'll look at this level as support, because after all, this is where we stopped before. This is where all the institutions had purchased earlier. This is where they're touting the volume has picked up. Obviously, this is good support here. So let's say you put an order to buy, and then look what happens. Well, it looks like the sell-off hasn't concluded. But you still believe in support and resistance and all the rules and different ways in which to apply it. Maybe you didn't read the textbooks or the manuals carefully, and you go through all the information again, and you realize that you jumped the gun. This is actually where support is. This is where all the institutions are showing where they're a buyer, and this is where the sell-off is therefore going to conclude. So you've decided this is where you want to buy, and so you purchase once more, and this happens, okay? See, the trouble with support and resistance is that it works sometimes, but other times it doesn't. In fact, the majority of times, it's been my experience where it doesn't work at all. There are some traders who are able to trade support and resistance very well, but they're the minority, all right? It's the same thing with Fibonacci levels, all right? I tried trading Fibonacci. In fact, I went to a seminar, this was back in the 80s, on Fibonacci levels, okay? This is when a lot of people didn't know about it. This is when I was still on the floor myself. And I've still not been able to find any consistency because it's too subjective. Now, since today's presentation is entitled, how to know with pinpoint accuracy, how to know when a sell-off has concluded, it stands to reason that we can just turn the rules upside down and know when a rally or a bounce has concluded as well. Let me show you this example right here. As we look at this generic chart, we know that we're in a downtrend. Okay, we've been going lower. All right, we think there's going to be a little bounce, and we want to take advantage of that when we want to know when the bounce or the rally has ended. So with conventional Fibonacci, one of the standard modes is to simply measure the move from where the sell-off started to where the sell-off concluded, And then once you get half the distance of that, that's where you want to sell. That's where the rally should end, all right? So you wait for a price to rally, and it does, and you place a sell order right here. Now you're all excited. You read all the course material. You've gone to the seminars. This is a perfect textbook scenario of Fibonacci levels and where you should sell because they're going to make a new wave down. So the rally should end here. You get short, and look what happens, okay? Look familiar to anybody. Just like support and resistance, Fibonacci will work. When it stops working, you'll fail miserably, and most likely you'll give everything back. Trust me, I tried both of these. I went to classes and seminars 40 years ago, and I still have not been able to use it with any level of consistency. Once again, don't get me wrong, I know of traders who trade support and resistance as well as Fibonacci levels tremendously well. They make a fine living off of it, but they are the minority. They are not the majority, myself included. The rest of us, the 99% of the rest of the traders, have a very difficult time trading it. So if you're entering a trade incorrectly, it's basically because you are entering it based off of support and resistance and or Fibonacci levels. Why? Because they're similar to gambling. Because these techniques are very subjective, which makes them extremely difficult to master. Once again, there are a few traders, probably 1 or 2%, who are able to master these techniques. But the majority of us can't because they're very subjective. So how do we enter correctly? Well, in order to know with high probability when a sell-off has ended, one must apply a tool that listens to the market. See, these other tools were predicting where price should stop. But we need a tool that simply listens to the market and doesn't predict, but listens and then translates to us which direction the market wants to go. So what we're doing, instead of predicting that we're going to stop at this level, that this is where support is, you see how we're telling the market, this is where your support is, this is where you're stopping, this is where you will retrace. We're not doing that here. We're listening to market and saying, listen, wherever you tell us you're stopping, that's where we'll jump on in. We're not going to make any type of prediction here. So we need a tool that does this. Now, in my 40 years, I've only found one tool that does this with a very high level of consistency. You've heard about me speak about it before. It's the PET D. That's when we apply the PET D, that's when we learn to listen to the market. Why? Because it simply translates what the market wants to do. It doesn't predict anything. It doesn't tell us that it will end here. We will know 20 bars in advance that we will end here. Or we will know that, by next day, tomorrow, this is where you should be selling or buying. It doesn't do that. It simply takes each calculation of the moment based off momentum, and then we translate it through our color bar tool. That's what we've done. We've translated it into a proprietary color bar algorithm. So we know simply by looking at the color of the bars which direction we should be going in. If you have a series of green bars, we are translating that the market, whatever we're following, wants to go up. It's in an uptrend. Conversely, if you have a series of red bars, the translation is simply telling us that whatever market you're tracking, whatever time frame, it wants to go lower. It's that simple. We don't have to try and predict anything. We don't have to try and stand in front of a speeding train and say, this is where you're going to stop, because this is what all the rules of so-called support and resistance of Fibonacci tell us. We're not doing that. We're just simply telling us, listen, if you're going to pick a top or a bottom tomorrow, that's fine. If it's not going to be till next week, okay. If it's not going to be till 2 weeks or a month later, that's fine. We'll just wait. We're listening to you. So this is the way, once again, most people will trade, or conventional wisdom tells us to trade. You'll see the market going down like this, and then we'll say, well, this is where support is, okay? Look, we have a double bottom here. The chat room I go to says that all of the institutions are buying. So this is where we want to buy too, right? This is the way we've been taught. You want to piggyback what the institutions are doing. So if they're buying, this is where we want to buy, right? After all, that's the way you trade support, and we can see that there's really no consistency in that. But then you see later on, you make a nice little bottom here. After all, if you trade candlesticks, this is a hammer. You've made some kind of inverted head and shoulders. So lots of setups here telling us that we've probably bottomed here. All right. In fact, we've actually bounced from that bottom. So you jump in and buy, and it doesn't last very long because now we gap down lower. But guess what? There's even another setup here that is predicting we will stop. This is called a reversal. Look at what we did. We made a lower low, and then the next day we reversed right back up. So that's telling us that this is the bottom. We should buy immediately, right? Well, not really, because the next week we go even lower and make a lower low. So it's at this point that you throw in the towel and say, none of this stuff works. I spent all this money, I go to all these courses, everything I've paid for, nothing works. I've spent thousands and thousands of dollars. Why isn't it working? Trust me, I've been there. I know what that's like. And this was years ago, and I did the same thing. All right. Well, usually when you throw in the towel, this is what happens. So how is the pet D different from all of these techniques? Well, remember, the pet D tells you when a sell-off has ended. We're not using some convoluted logic, some indicators or some tools that only work with a low level of consistency. We're just listening to the market. Here's how it works. In order to determine when the end of a sell-off is, in a downtrend, a number of red bars will appear. The pet D will color a number of bars red. This is the sell-off, okay? So if we're not in the sell-off, if we don't like to trade sell-offs, if we don't like to be short, if we don't have puts, so if we don't short the stock, we're simply on the sidelines. But we want to get in once the sell-off has concluded. So the very first green bar that occurs is a very high probability sign that the sell-off has concluded. Now, a couple of things here. You notice it didn't say that is the exact bottom of the market. We're not trying to pick bottoms. And conversely, we won't try to pick tops either. We're just listening to the market tell us. So with this technique, very rarely will you pick an exact bottom or exact top. We're just, once again, trying to figure out with a level of consistency when it's over. That's all we're trying to do. So let's look at that same example again. All right, let's say we weren't trying to use conventional wisdom to pick a bottom here. Well, it's a good idea because look what the pet D did. The pet D has been coloring this bar red. So if the pet D is red, what is the market telling us? It's telling us this wants to go lower. So why on earth would we ever try to swim upstream? Why would we try to buy if all the bars are red? It's silly. All right, but this is the way 99.9% of all traders trade. All right, what we want to do is wait for the first green bar, which is right here. All right, that is a high probability signal coming from the market, not from some convoluted logic of support and resistance or Fibonacci levels or Elliott wave or volume. All these things have no levels of consistency that we want to get involved in. But the pet D does. So the pet D is telling us through its proprietary method that this most likely is where the sell-off has concluded. This is what it's translating. All right. You notice we didn't pick the bottom. We're not trying to pick exact bottoms or tops. We just want to know when it's over. And as you can see, look how well that worked. All right. Now, conversely, we can use this to pick and decide when a bounce or a rally has concluded. Let's look at this older chart of Apple right here. Let's say you're following Apple and it's been going up very high, very sharply and very quickly, and you're not in it. And you just want to know when it's over, when this rally is over, because you want to short it, or maybe you are in it, you want to know when to get out. Well, the chat room you go to or the trading room you go to says, you know, Steve, this thing has bounced up so much, so quickly, it's tremendously overbought. All of the indicators, everything we track say it's in overbought territory. So you've got to sell it here, right? All right, so let's say you sell it, sell your position, or let's say you even go short. Look what happens. What happened to overbought, all right? There's no such thing as overbought. It doesn't exist. Trust me for someone who tried to trade overbought, oversold. It doesn't work. We've seen markets continue to be overbought for weeks, months, years. All right, so let's say you're still short, or let's say you sold your shares and you're thinking, boy, what did I do here? Maybe I got out too quickly. Well, I'm going to get my money back. I'm going to go short. And once again, the chat room tells you that this is where resistance is. This is where all the institutions are selling. And you always want to, piggyback on the institutions because they're always right? And this is where the volume has really depleted, so that this rally has gone up on nothing. So there's a double top here as well. Here's the resistance. I'm selling. So you sell, and not only doesn't stop going up, but it gaps up even further. All right. In fact, on this fourth day here, you have an exhaustion gap. Let's say, your technician friend says, this is it. This is an exhaustion gap. It's gone up on no volume. None of the indicators confirm it. It's a very weak opening. Look the way it closed. So this is called an exhaustion gap. So you want to sell this. So let's say you sell at the close of that bar, and it goes down a little bit, but starts to go back up. At this point, you say, I can't take this anymore. I'm throwing in the towel. I've lost too much money. I got out too quickly. And then I lost money. Everything I made on the long side, I've lost by trying to short it by getting my money back. All right. So now you're out. And then, inevitably this happens. All right, and this is where traders kick themselves. I know this looks familiar to most of you. This has happened to me. It's the worst feeling in the world. Okay, so the PET D tells us when a rally has ended. We don't listen to all of this outside, what my mentors called noise. We just listen to what the market is telling us. You see, for some reason, we've been trained to listen to this noise, and that's supposed to tell us what the market's going to do, or the stock, or the future, or the currency pair. But the only thing we don't listen to is the actual thing we're trading. We never listen to that. All right. This is what the PET D does. The PET D listens to it, and then it translates what it tells us what it wants to do. So, if we're trying to determine when a rally has concluded, well, in an uptrend, as we looked at right here, you're going to see a number of green bars. All right, this is the PET D telling us, it's translating that, well, the market wants to go up. All right, this is our rally. Now, the first red bar that occurs is a high probability sign coming from the market that the rally has concluded. It's not predicting, it's not guaranteeing, but it's a high probability sign that most likely that rally is over, at least for a certain amount of time. So if we look at Apple once again, let's forget about all this convoluted logic, all this noise, all this stuff that shows no levels of consistency, because trust me, I've tried them all and I've never been able to really make consistent money trading them. And let's just apply the PET D. As we see here, well, that entire time the market was going up in Apple, the PET D was green. So why would we want to sell Apple? Silly. Why would we want to predict when a top was based off support and resistance, or based off of Fibonacci, or based off gaps, or based off of news? It's silly. Let the market tell you what it wants to do. After all, that's what you're trading. Now the market right here tells us it's the first red bar. So this is a high probability sign that maybe this rally has concluded. So if you've been lucky enough to be long Apple this entire time, you maybe want to sell on the first red bar. Maybe you want to move your stop up, or if you're a more aggressive trader, perhaps this is the end of the rally. And in this case, it was. So do you see how Apple fell out of bed? In fact, it gapped down rather strongly, but how the PET D translated that for you well in advance of that big, strong move to the downside. Okay? This is the beauty of the PET D. I have been trading with this for roughly 35 years on a daily basis. I traded with it this morning. I trade with it every day. So this is something I use in my own personal trading, and there are a number of ways in which to apply it to your own trading. Let's look at some more examples now to give you a better idea of how this works. All right, KORS, all right, CORS. All right, we're coming into June here. Obviously, the market was going lower, all right? Now, wouldn't it have been nice, though, before this big gap down to the downside that you knew the market was going to go lower? Well, usually we don't know this until it's too late. But if we had applied the PET D, well, we would have known well in advance, way up here, that we were red. We had consistent red bars well before this really nice move to the downside. So we wouldn't have gotten hurt because we wouldn't have been in long this stock. Now, as we're going lower, a lot of people say, well, I want to really buy this, at least for long term. I'd like to invest in this stock. How do I know when this sell-off is over? Well, what do we have here? Here's our first green bar. You could have taken advantage of this and said, well, you know, there's a high probability chance that this may be the end. And in this case, it was for a short term because it was up for the remaining 3 or 4 weeks, another 8 points. How about HRB, all right? Okay, now this has been going up. As we can see, we've been in a nice uptrend. What we have liked to know down here that we were in an uptrend? Well, we've applied the PET D, and the PET D was already long, already given us green bar as well back here. But at this point, we have one small red bar, all right? This is a very nice sign that the rally may be over. So if we wanted to sell or at least take some profits or maybe go short, we could have, because that's our first sign that the market may be concluding the upside. And as you can see, it was. It fell out of bed, even though it's only 3.5 points. It was all relative for the price of the stock. The beauty, once again, of the PET D is well before we started to really have some downward days here, we were signaling, the market was signaling, not us, not some convoluted, you know, indicator or something that's based off of, inconsistency in it, but something that's really just translating what the market wants to do. It was telling us most likely the trend has changed. Well up here, give you plenty of time to get out. How about GWW, okay? As we can see, we had a real strong move to the downside, strong gap to the downside. How could we have known? Well, pet D was coloring the bars red. Now here we would have thought, well, maybe we're bouncing and this is the bottom. We've got a nice bounce, but the entire time we bounced up. As you can see, even though we had higher days where these days opened and closed higher, the pet D was still outlining them red. So the pet D was still saying, even though this is a nice little bounce here, I haven't really concluded that through my translation of the market that the market wants to go higher. And as you can see, it didn't. It actually came down again. You may have gotten long here based off what somebody said in the chat room, and then once it started to go lower, you would have stopped yourself out. It wasn't until here that the pet D translated the market may be concluding its downside move. And this would have been your indication that this may be a time to cover your short or to get in the long side. And the stock went up 14 points in the next 3 weeks. Okay. Now here's an example of how, I wouldn't recommend this because you have to be in a kind of a rangy market to apply this, but a lot of our traders, a lot of our students like to apply the pet D this way. They use it as simply a stop and reverse type of method. Okay. I personally don't like to use it this way because many times you will get in and out too late, but it's up to you. You just have to add a little bit more structure and some money management to this. But as you can see in this example in CF a few months ago, we were red, and the first green bar would have been your indication to buy, and that would have been right here at roughly 28.5, 29, and we went up about 3 or so points until we issued a red bar. So that would have been your stop and reverse. Now you go short, and you have a nice strong move to the downside. On the very first bar here in July that turned green, you stop and reverse. Now you're going long, and you go up about 3 more points until you hit this first red bar. Now you exit your long and go short, and we go to the downside. All right. So oftentimes when you have these nice rangy moving markets like this, you will be able to trade the pet D like this as well. But we don't recommend that the pet D is a trading strategy. It's mainly a tool just to tell you what the market wants to do with that current spot. Now as we look here in BIIB, we see here that we had a really strong move to the downside. And how could we know when this is over? Well, you simply apply the pet D. And the stock was moving sharply to the downside from roughly 260 down to 230, 30 points to the downside until we met the first bar here that was green. Now, if you were waiting to get long, this was a high probability sign coming from the stock, not coming from some guy in a chat room, coming from the stock. The only thing you should be listening to that was telling you, hey, listen, I may be going higher. The sell-off may be over. If you wanted to take advantage of that, well, it would have been a good idea because BIIB went up 90 points in the next month coming into August. Now, no one called us up from the company and told us to say, hey, Steve, tell all your students around the world, around the country to go long our stock because we're going to start going higher. We didn't listen. We don't listen to those things. We don't look at fundamental news. We don't look at tons of indicators, maybe only 1 or 2 at the most. We really just learn to listen to the market. That's all we do. Now, this also can be applied to other markets. I know a lot of you may not trade stocks, all right? So let's look at, first of all, the indexes, all right? Here's the S&P 500 index, all right? As we can see, we're becoming lower, and then we started to bounce. Well, on the second up bar, we issued a green bar through the PET D. So the PET D was telling us that the S&P index wanted to conclude this sell-off and go higher. All right, so if you were thinking about getting into the market in a particular stock, this would be a good way to apply it. Many of our students apply it to indices to tell them what to do in individual stocks or individual ETFs. All right, so this was the S&P giving some type of a buy setup right here, and this was in mid-February coming into March. And as you can see, right after that, the S&P 500 index went up 170 points, which represented over 1,000 points in the Dow. So you could use it this way as a market timing tool, all right? And a completely different way to use it in a completely different market. Now, many of our students like to intraday trade, all right? Here's a chart in the 15-minute chart of the S&P 500 future. Obviously, we were going down. Now, this was just, I believe this was just last week, actually, at the very end of August. We had a very strong sell-off in the mid to the end of the day. And at the very end of the day, the last hour on this 15-minute chart, guess what happened? We have our first green bar right here. So if you were thinking about going long and you thought that maybe you could carry the position overnight, this would have been your signal that perhaps the market has ended its sell-off. And in this case, it did, because if you're lucky enough to carry the position over into the next day, well, that was 18 points in your favor in less than 24 hours, or $900 per contract in the E-mini. How about the British pound? All right, let's look at a monthly chart. We're going on to currency pairs right now for all you currency pair traders, all you Forex traders, and we're looking at an entirely different time frame. We looked at a 15-minute chart. Now we're going to a monthly chart of the currency pairs. Here's the British pound going back to May, July in 2014, just over 2 years ago. All right, and as you can see, the British pound on a monthly time frame was going higher, but then we had 3 consecutive lower bars or lower closing bars. And remember, once again, the PET D just translates what the market wants to do. It's not designed to get you out at the top, get you in at the bottom. It's designed to translate and just simply to tell you what the market you're tracking wants to do, regardless of time frame, regardless of market. So if we look at this monthly bar here with the PET D, we see that the entire time the bars were green, even those 2 down days towards the end here, until we had this 1 month, which I believe was September or August of 2014, just roughly 2 years ago. So 2 years ago, not some guy in a trading room, not some guy in a seminar or some guy on TV, but 2 years ago on a monthly time frame, the British pound told us it most likely has concluded its upward move and it wants to go lower on a monthly time frame. All right, that's the only thing I need to know. I don't need to listen to some guy, some analyst tell me what he thinks is going to happen or what should be happening in the British pound. I just need to listen to the market. I just need to listen to the British pound tell me. All right, and the PET D translates what it wants to do. So as you can see here, we've gone down 3,000 pips, or $30,000 per contract since that happened. Now remember this past year, when the news came out in Brexit and everyone was just shocked and the markets fell out of bed, everyone panicked, especially the British pound because, you know, the Brexit, the British exit, you know, with the vote, everyone panicked and the British pound fell out of bed. Well, here's when that happened right here. Isn't it funny how the PET D had told you 2 years in advance that we wanted to go lower? So this is why we don't care or concern ourselves with fundamental news, because most of the time the market tells you in advance what it wants to do, even on a monthly time frame. So if we tell our students, listen, if you would like to listen to news, if you like to look at earnings, if you like to wait for these news announcements to come out, you're more than welcome to. But it is in no way recommended or suggested or required that you have to. I mean, I used to trade on the floor. I never looked at news. And I've been trading for nearly 40 years now. I stopped looking at news over 35 years ago. So it hasn't hampered my trading at all. And I think the very fact that I stopped looking at these things, what my mentors called noise, that has been one of the major things that's contributed to my longevity. So if you can't, you know, cut the umbilical cord, you're more than welcome to look at these things, but they're not required because we don't apply them at all. Remember, our focus is on giving you sound education that has stood the test of time. Now, here's what I told you, an entirely different market. Here's a chart in cotton. Now, I personally don't trade cotton. I've traded it in the past many years ago, but I don't trade commodities anymore. Here's a chart in cotton just to show you that this technique will work in any market, in any time frame, and in any direction. As we can see here, in July coming into mid-August, cotton was going up higher. Now, if we applied the PET D, we see that it was confirmed well back in advance before the rally even started that the bars were green. So the PET D was already telling us well back here that most likely we're going to be going higher. And then it took off, okay? Now, in the first week of August, what do we have here? The first red bar. So this could have been an indication, a high probability indication that cotton, this nice little rally we'd have here for the last month, was concluding, was ending. And as you can see, it did. It was a great signal. You could have exited cotton or just waited on the sidelines for the first green bar. And look what happened here this past week. This was just last Thursday, I believe, a week ago, or not even less than a week ago. We had our first green bar in cotton. So for all you commodity traders out there, it's a little bit too early to tell, but this is what has happened since then, since I took this snapshot of the chart. So if you do trade cotton, or if you like to watch it, you can watch this particular time frame, daily charts, and watch this particular chart and see how this unfolds. But right now, until the PET D changes color, you know, the PET D is saying that the sell-off has concluded in cotton. All right, so let's recap here. I share with you a very simple but high probability technique for pinpointing the end of either sell-offs or rallies. I showed you virtually tons of different examples in all markets, all time frames, in all directions, okay? This is something that I use on a daily basis, the PET D. That's how powerful it is. And I've been using it on a daily basis for about 35 years. Now, I want you to ask yourself before you ask me any questions, I'd like to ask you something. Do you think this edge could have helped your trading this past year? Now, we're in the last quarter of the year. Think of your trading when you first started in January 2016. I know you had all these dreams and hopes and goals of where you wanted to conclude the year, have so much. Maybe you wanted to go on that dream vacation. Maybe you wanted to buy or have that special add-on project for your home or buy that car, all right? Many of us have the hopes of making this extra income to have that. And by the end of the year, I would say 9 times out of 10, they're never realized, okay? So ask yourself, if you had had this edge, you think it could have helped your trading this past year, okay? Well, here's our special attendee discount we have for all of you. We're going to give you a great package today for the PET D. That's how much we think it'll really help your trading. We're presenting the PET D. We're giving you the full course. This, remember, is a roadmap for any market. It's our proprietary color bar algorithm, and it includes the add-on. So with your particular charting software, whichever one you use, you simply add the add-on, upload the add-on onto your charts, and it will automatically change the bars from green to red. And this comes with the course, with many videos in the course so that you can learn exactly how to apply it, because there's many ways to apply it. And let me just show you a couple of things that come with the course, because not only do we just supply you with the add-on and just say, well, good luck figuring out how to use this. We really teach you. We take time and we go into detail on how to apply it correctly with many different ways. In fact, in the course, we give you 2 pullback trading techniques. And let me share with you one of these pullback trading techniques, okay? Entirely different from what I just shared with you today. Because with a pullback technique, what we want to do is figure out what the trend is and then just look for a minor sell-off before we go long, or look for a minor rally before we go short. As you remember, I was sharing with you, large major sell-offs or major rallies before it had concluded. But with a pullback, it's entirely different. As we look at this example right here in BDX, someone could say, well, there's really no trend here. I'm not going to do anything. Even though the PET D is coloring the majority of these bars green, I really see no setup here. Well, even with this limited example here, the PET D example of how to trade pullbacks actually generated 2 buy signals right here. And you would have been able to take advantage of this nice 20-point gain that happened in the next 2 months. It works to the downside as well. All right, in PRGO, it generated 3 sell signals. Now, they didn't really do much initially, but ultimately they kicked in and the stock fell 40 points in just 3 weeks. You can apply this to commodities. Once again, there was 2 perfect buy signals in crude oil, as well as the 30-year bond. There's a monthly chart of 30-year bond. This was coming into July of last year. We had a small minor sell-off, only 2 red bars. Then our first green bar signaled the buy setup. And as you can see, bonds have been going up coming into September. We can also apply this to intraday trading. Here's a 10-minute chart of the E-mini S&P. Now we just had a small little bounce, only 3 or 4 green bars. Our first red bar signals the downtrend. And that's where we could have taken advantage of 18 points or $900 per contract to the downside. Here's a 5-minute chart, okay, of where you could have taken advantage of that small little sell-off, that little pullback, and it was 8 points to the upside on a 5-minute time frame. An entirely different market, we can look at a weekly chart of the Canadian dollar. The Canadian dollar has been going straight up. In October of last year, it had a small sell-off, but the PET D generated a buy signal on this pullback technique, which we teach you in the course, and then it was 1,400 pips to the upside on a weekly time frame. And then lastly, we can go to a daily time frame. Here's the dollar yen. All right, most people would have thought, well, the dollar yen has bottomed here. All right, now we're making a nice bounce to the upside. We should stay long. Well, no, the PET D said that this was a sell setup according to this pullback technique, which we teach you in the course, and it was 500 pips or $5,000 roughly per contract to the downside. So this is an entirely different technique that is taught within the PET D course. That's how valuable this tool is. Once again, I said I use it on a daily basis. There are a number of ways in which to use it. Students are constantly emailing me saying, Steve, I discovered I can use it this way, or I can use it as a stop technique. I use it for continuation. I can confirm a signal setup. So in other words, even if it's not one of my strategies, let's say it's a strategy that you've had some moderate success with. Many of our students have applied it as a confirmational tool. So if your strategy, whatever it's based off of, it could be even based off the news, it could be based off of the tides of the ocean, it really doesn't matter. But if it's confirmed by the PET-D, in other words, if your strategy generates a buy signal, and if the PET-D colors that bar green, our students have told us that they have a higher level of consistency just by adding the PET-D. And included with this, and I think what's probably the most important, you get nearly 40 years of mentoring correspondence with me. So I'm your mentor right there along with you. You can contact me as long as you want. As long as I'm trading, I'll be there for you. And this comes included with the course. So 40 years of experience, I'm there for you to answer any question that you may have. This is all with your roadmap for any market. Now, because of its priceless value, it is going to be more expensive than many of our other courses that we have. The PET-D application and course is a full price of $29.95. But guess what? For all the attendees today, we have payment plans available. So what this means is that for a limited time only, you can come in with a small deposit. You don't have to come up with that large lump sum of $29.95. You can come up with a small deposit and you can be up and running ASAP. All right. So here's how to take advantage of that. Contact my sister site, Pro Trader Strategies. They handle all of my courses, marketing and material, and all of the setup for all of our students. Pro Trader Strategies can be reached either through emailing them at the email address there, or calling them directly to set up a payment plan at 310-598-6677. They have many trading consultants manning the phones right now. You can talk with them. There's no obligation at all. You can just talk with them to try and figure out what a payment plan would work for you, and they'll set it up for you. As well, we have a great tech support that will set up the PET-D, help you set up if you're having difficulty, help you set it up on your platform. Now, here is the link to that sign-up page, okay, as you can see there on the very bottom. Now, if you're having trouble, don't worry, that's not a live link. So what you want to do is simply go to the chat box. If you look on the chat box on the far right, Pro Trader Strategies has posted a live link. So all you have to simply do is just click on the live link there. The link in the screen in front of you is not live. So just go to the chat box on the right and it will automatically take you to that sign-up page. Now, if you want to put together the payment plan, remember that's only for a limited time only. So the best thing would probably be to call Pro Trader Strategies at 310-598-6677. All right, I'm going to leave this information up here so you can call them or email them or go directly to the link provided in the chat box. And I'm going to open up the question and answer box here. And I want to thank you for taking time to ask any questions. All right. Okay, Craig asked the first one. Why are your color symbols some solid and some hollow? That's a good question, Craig. Well, first of all, I was showing you candlestick charts. Okay, and if you look at candlestick charts, I always explain this. When I first learned candlesticks, roughly about 35 years ago, I was taught the basic Japanese candlestick format, which was if you have an up day, the open and then close is higher, it's called a hollow bar, and that's on a white parchment or a white piece of paper. So an up day was always white, all right? And if you had a down day, the open and close lower, those downward days were a dark body, and they were always black. All right. For some reason, westernized students couldn't understand this concept. So to make it easier, a lot of charting softwares colored the bars because Westerners like to see green for up and red for down for some reason. All right. So that's what they thought. But that's not really the standard basic traditional way of candlestick trading. An up day is simply white and it has a black outline. A down day is dark, it's all black with the candle wick being black. So once you add the PET-D, it's easy now to apply because now you will have an up day and you'll still see it hollow, but you'll have this kind of light green. And if it's a down day and it's still in the PET-D is still saying it's in an uptrend, you'll have a light green on a kind of dark body. That way it makes it easy to see what the day was it up or down, applied with the PET-D. But if you use the standard conventional way of using candlesticks, it's easy. But if you use the westernized way, well, you can't make the difference out. You'll say, well, I don't understand. remember, we were taught westernized way, which makes no sense in standard Japanese trading candlesticks, how to view them just to make it easier for us because we couldn't understand the concept. But in the traditional candlestick, there was never a green for an up day and a red for a down day, or other colors. They never used colors. It was either a white background or simply black for down. All right, that makes it much easier to see how the PET D works. Okay. Let's see. Bobby says they bought this package but have a difficult time applying it to Thinkorswim. Yes, it works on Thinkorswim. What you have to do is it's not simply applicable because the way Thinkorswim is set up, they won't allow us to apply it to their charts. That's just the way their program is. So what we do is we splice the data from Thinkorswim, and then we give you a free NinjaTrader platform. Okay, and then you apply it to NinjaTrader where it works perfectly. And in fact, some people like it even better than Thinkorswim. So what you have to do, Bobby, is simply contact our tech support, and they will set that up for you for free. In fact, all of you Thinkorswim users, it can be applied to Thinkorswim, but you just simply have to. What we do is we take the data, we share the data with Thinkorswim, and they're perfectly okay with that. They do a number of other programs where they do that because they won't allow outside indicators to be on their charts. And so we apply it to a NinjaTrader platform. Now, a lot of people will say, well, I don't have NinjaTrader. There's no problem. We give you that for free. There's no extra cost. In fact, our tech support puts it all together for you in a very short time. Just a matter of moments, they'll have it all set up, and you can be looking at both Thinkorswim and NinjaTrader in just a few moments. So it's a great, great deal. We do this all for you, no extra charge, okay? In fact, let me give you some of the platforms. I know a lot of people are asking, well, what platforms can I apply this to? Get out a pencil and paper or write this down, or if you hear your platform called, you know that these are the ones, the major ones that you can use the PET D on. Okay, first of all, as we said, Thinkorswim with a NinjaTrader platform. You can apply it to MT4, TradeStation, Metastock, NinjaTrader, once again, Sierra Charts, Interactive Brokers, and FCXM, okay, along with Thinkorswim with the NinjaTrader platform. So those are the major charting platforms that people use. And if you have another one, contact Pro Trader Strategies. They may have a new updated list so they can share that with you, and you may be able to use the PET D there as well, okay? Okay, Ardian asks, do you use stop loss when using the PET D? Yes, you can. It's up to you. And I don't know if you saw that in, let me just backtrack real quickly here. As you can see, it comes with 2 continuation trading techniques. It also comes with trailing stop technique. So we do have a stop loss technique included within the course. So there are a number of ways to use it. It's not just a way to pick tops and bottoms or to find out when an exit for a sell-off has concluded or a rally has exited. We don't have to worry about that. Is that the only way to do it? There's 1,000,001 ways to use it, and we share all these with you in the PET D course, okay? Remember, for a great payment plan structure for this great package of the PET D, just contact Pro Trader Strategies. They'll set something up with you. They'll work with you. So with a small deposit, you can be up and running. You can be my student right away as early as today, and you can be emailing me and corresponding with me and learning how to apply the PET D to your particular type of trading, okay? Let's see, somebody asks, do the bars change color at the open of the bar or at the close of the bar or at any time during that particular session? Good question, Sammy. What happens is that once a bar opens, the PET D automatically decides what color it is based off of its formula, all right? Now, as that bar is live, let's say you're looking at an hourly bar, all right? That bar may change from, let's say, green to red back to green again. But wherever it closes at the end of the hour, it stays that color. It will never repaint. So I know a lot of you have looked at indicators before. You've looked in Fibonacci or other charts that seem to repaint or reformulate afterwards. This will never happen with the PET D. If it closes at green, it will always be green. All right, so you can always go back and paper trade and study and look at old charts with the PET D applied, and you never have to worry and say, gosh, last time I looked at this, it was red, now it's changed to green, so how do I know how to apply this? It doesn't do that, okay? Now, while the bar is open, while it's calculating in the time frame, you may see it jump back from green to red, but it doesn't do this a lot. In other words, it's not going green, red, green, red, green, red every 5 seconds. It doesn't work that way. It's a slower formula. I just want to reassure you, though, that it does not repaint. Once it closes at the bar, it closes with that color, okay? Hope that answers your question, all right? People are asking how to set up the PET-D in the platform. Remember, it all depends on the platform you have, but there's no worries because we have a great tech support department that handles all that for you if you have any trouble with it, all right? It's a simple process of just uploading it onto your platform, but if you don't know how to do that, don't worry. We don't just say, good luck, you know, you should be able to figure it out yourself. You can call up our tech support and they'll help you with it and they'll walk you through it, or else they'll do it for you, all right? Joe asks, how do you interpret mixed colored PET-D candles in a run of candles with up, down, sideways? Okay, this is a good question too, because many times in choppy markets, as you'll see maybe in a choppy summer market in August, or even intraday during lunch break where, you know, the markets are just kind of going sideways, you won't see that nice consistency of all green or all red bars. You'll see up, down, red, green, red, green. All right, so the beauty of this is that with different strategies and different techniques we teach you in the course, this will actually keep you out of trades, because what you're looking for many times is confirmation. So you're looking for 3 to 5 consecutive green bars to tell you that the trend has changed, or maybe 3 to 5 consecutive red bars, or you're looking for a specific pattern once those bars have begun. And if you don't find them and they switch to another color, well, guess what? Maybe you didn't have a trade, but at the same time, you weren't stopped out because you were whipsawed either. So what the PET-D is doing is it's keeping you out of trouble. And that's the beauty of it. Whereas if you're not using the PET-D, you may see that, okay, I got a system, my system, whatever I'm using, generated a buy signal, and then you get stopped out 5 minutes later. Well, the PET-D oftentimes will keep you out of that because it switched to another color. And that's the beauty of it. So some of the best trades are the ones you never take. And this is what the PET-D will do oftentimes as well, okay? Let's see. Johnny's asking for day trading. Would you advise trying to trade using the PET-D as an indicator on short-term time frames, in other words, 1, 5, 15 minute, or is it generally better to get signals off, say, an hour chart or longer? Johnny, our philosophy is, and as I stated at the very beginning of this presentation, is that our only job is not to tell you how to trade. Remember, this is why most students fail, is because they go to a chat room or a trading room and somebody says, this is the way you should trade this on a 5-minute chart, or this is the only market you should trade. And that to me is a recipe for disaster, because everyone has a different way in which to trade. They have a perfect time frame, a perfect niche. All right, some traders use the PET-D only for daily bars and they say it works best on daily bars. Whereas someone will say, no, I use it on tick charts and that's the best time frame. It works best there. Someone will say, well, yeah, but it works the best on currency pairs. And someone will say, no, it works the best on futures markets. There is no right or wrong answer. And for me to tell you what would be the best is basically you saying, I don't know what to do, tell me what to do. And that goes against our philosophy. We want to give you the information, we want to provide you with it, show you all the different ways it can be applied and used, but then you make the final decision, because that's the only way you will be a consistent trader. You cannot get it from somebody else. Trust me, I tried to 40 years ago and I struggled tremendously. I couldn't make a dime. And so I realized that the great truth in trading is that no two traders should ever trade alike. Everyone has a different style because everyone has a different personality. So the great truth is you have to find your own way and then stick with it. Now I'm there with you with 40 years of experience helping you find what that is. But ultimately you're going to have to decide, is it better on 15-minute or is it better on an hourly? Because ultimately it's what works best for you. It's not the type of tool that works best in a market or best in a time frame. It's you that makes it best because you're the one who's bringing your personality or your traits to trading it. All right. You may want to get in and out real quickly. All right. So that for you, what would be the best thing would be a short-term time frame, 1-5 minutes. Someone else may say, no, I like to squeeze as much profit as possible. So maybe they want to trade in hourly. So for them, they think the PET-D works better for a longer-term time frame. But there is no right or wrong answer. The only wrong answer is when you go to a chat room and listen to some guy tell you what to do and try to emulate what he's doing. Ask yourself, how's that working for you? If that's so great, why aren't 80% of all traders successful? It's actually the opposite. 80% of most traders fail. It's because we're trying to copy someone else or have someone else tell us what to do. Our philosophy at Specialist Trading is we don't do that. We're giving you the tools and information that have high levels of consistency. We're molding them with you to fit your style so that you can feel comfortable trading the way you like to. Okay? I hope that answers your question. Karan asks, do these strategies work for the Indian market? Well, Karan, I have to firstly say I do not trade the Indian markets. But having said that, we have a number of students and members that trade in India who have reported back to us tremendous success with applying these to the Indian markets. Okay, and I get them. I get these emails roughly about on a monthly basis, telling them how well they work. So I'm almost thinking I should start trading the Indian markets because they work so well for them. But I can just say from what we have been told before by many of our other students that they work tremendously well in the Indian markets, as well as markets in other countries and other states or countries around the world. So we've had no complaints so far. Okay. Oops. Before we go there, let me switch some more questions. Remember, if you're asking if this works as an indicator, that's basically you get the same answer. Yes, it does. You can apply it to all time frames. So if you want to use this as an indicator or of a confirmation tool, it's up to you. So because it can be applied to all of those. There's no right or wrong answer. We have people that use it for an indicator on tick charts. We have people that use it for a strategy confirmation on tick charts. So once again, the answer is the same. It's really up to you. You have to work with it to see if it works for you. But it can be applied in any market, in any time frame, and in any direction. Okay? I hope that answers your question. And these are great questions. Trust me, these are great. I'm really going into detail trying to answer them, but only because they're great questions. I just want you to understand that ultimately you're in charge of your own success, not us. We provide you with the tools and information, but you're the one that are going to be able to really make it powerful for you. Now remember, this is a great deal because we don't always offer payment plans. We realize that not every one of you can come up with that one sum of $29.95. So if you're interested, you can construct a payment plan. But all you have to do is first contact Pro Trader Strategies. Contact one of their many trading consultants. There's no obligation. Just ask them how you could do this, see if it works for you, and they'll work with you putting together a payment plan. You can structure it, have a small lump sum, a lump deposit, and then you can start making payments along that. So you can be up and running as early as today if you'd like, okay? All right, so I want to thank you so much for attending today. And remember, ask yourself, we're close to the end of the year. Are you anywhere where you thought you'd be at this time? You know, we're going to be starting in October in just about 3 weeks, if you can believe that. So, we're getting into some nice volatile markets now, and this is where things really can add to your consistency. So if you're really interested in finishing out the end of the year with a nice, consistent method, we really strongly urge you to take advantage of this Pet D offer that we have for you today. Once again, I use it on a consistent daily basis. I've been using it for nearly 35 years, and in my opinion, it is the best trend identifying tool that translates what the market wants to do better than anything I've ever come across. Okay, so I just want to share it with you and share with you my experience on how it helps me. Okay. In conclusion, thank you so much for attending. I really look forward to all of you taking advantage of this, and most especially, I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I hope to see you next time. Bye-bye.